Well, global supply chain kinks, are they starting to look a little less troublesome in 2023? And what were the lessons learned from the Ukraine crisis and from the pandemic?
Good morning, Sri. It's a pleasure to be back, and thank you. Yes, if you look at global supply chains, there's been a significant improvement, reduction in the amount of disruption that is being experienced. This is something the supply chain pressures have largely subsided for now. They've subsided largely because of the reduced economic activity or economic weakness. If you look at different measures of supply chain pressure after seeing a very dramatic spike during 2020 into 2021 and throughout this year, they've dropped precipitously during the second half. This has also coincided with a dramatic decline in containerized sea freight rates. All of this is an indication of the economic weakness that is being experienced across end markets. And so as a result, when you look into 2023, with economic weakness largely expected to continue, we would expect more of the same for at least the first half of the year, with the potential for disruption or price increases to begin to reemerge as we get later into 2023.
Right. Can you expand on that, Heath? And how bad could it be? What are cargo flows telling us about the risk of recession? And allied to that, what signals are you getting about the inventory overhang starting to clear up or worsen?
Sure. I think if you look at 2022's performance, I think that I used a phrase previously that Christmas came early this year, which is a reference to the peak season, which is usually toward the latter part of the year being the most busy, most active. A lot of trade flow was pulled forward into the first half of the year. And as a result, the second half was very muted and flattish. Inventory levels are still above the norm, whether it be in the US or UK or Euroland. And that's going to take some significant time to work its way through. The positives of reduced logistics costs are unfortunately more than offset by higher energy costs, higher food costs arising from the Ukraine war. One other point, which is going to be a major theme in our opinion during 2023, is the impact of higher interest rates. The higher cost of capital is something which has not yet reflected itself in the economic activity. And so although inflation has likely peaked in the US and is expected to peak later in UK and Europe during the course of next year, the impact of this higher cost of capital is something that corporates and consumer haven't yet dealt with. And so that presents a significant risk to economic activity and to investment plans generally.